session is aiming to demystify growth capital for female-led businesses. We know that the process can be opaque, so we're keen for this session to be as clear and practical as possible. As Sophie mentioned, please do feel free to ask questions throughout, and we'll either cover those throughout the conversation or at the end. We have decided to put down a slide deck and keep this as more of a conversation, so we'll send around some follow-up information following the session as well to summarise that. So we thought we'd start by introducing BGF and ourselves before moving on to walk through the different stages of raising capital. So very proud to say that BGF is the most active investor in the UK and Ireland, having invested nearly 4 billion into more than 600 companies. We exist to provide long-term minority investment and value creation support to growing companies, so working with management teams as a non-controlling partner. We strive to provide more than just capital, so creating value through strategic support and enabling the right kind of connections. We're also very proud that BGF is the most active institutional investor into female-led scale-up businesses across the UK, with over 65 female-led companies backed and over 500 million invested to date. So across the organisation, we're committed to doing more, and we've recently committed 25 million to the 250 million Invest in Women's Task Force.
And in terms of our introductions, I'm Lucy Edwards-Jones. I've been part of the investment team at BGF for 5 years now. Prior to that, I worked in strategy consulting at CIL. Some of that was focused on due diligence projects for investors, which is how I became aware of the world of raising investment. Didn't have much sense of it beforehand. I now sit in BGF's early stage team, where our initial investment size ranges from 3 million to 10 million. We focus on specific sectors, predominantly life sciences and deep tech, and we invest in companies that are in the early stages of revenue or even pre-revenue. That does mean that in the absence of those kind of traditional financial metrics, we need to look for companies with a clear depth of IP, clear technical differentiation. So a couple of example portfolio companies there would be Organox, a medical device company with a system for perfusing organs ahead of transplant, and Maxion, a drug discovery company developing new treatments for difficult autoimmune diseases.
And I'm Hannah King, so I'm an investor in our growth team. I've also been at BGF for 5 years, based in our Cardiff office, but working across Wales and the South West. So it's very much part of our regional focus. Prior to BGF, I worked across the advisory teams at Grant Thornton, supporting businesses to sell, but also raise capital or reorganise when in distress. As mentioned, I'm part of the growth team, where our initial investment range is from 3 million to 30 million, so slightly larger in terms of that check size. We're actually sector agnostic. We have some restrictions around regulated financial services due to our shareholder banks. But given the volume of businesses we've worked with, we've got deep sector experience in many sectors, including technology, healthcare, business support services. And we're backing management teams and investing into businesses with a track record of growth and typically profitability in attractive markets and a clear strategic plan to achieve future sustainable growth. And our funding is being used to support a wide range of growth initiatives. So that could be international expansion, making acquisitions, or supporting partial shareholder liquidity and succession planning. And a few kind of examples of local investments includes Pure Cyber, which is a cybersecurity business where the funding has been used to develop its sales engine. Carrots.com, which is a retailer of licensed children's clothing. And Unrivaled, which is a digital experience technology agency where we support succession planning for the founder.
We thought it's worth looking at the broader funding landscape and kind of acknowledging the need for a webinar like this. Women do clearly remain underrepresented in entrepreneurship generally and in raising capital specifically. So we know that there's much more to do, and we're keen to be a part of this. So in terms of the funding gap, female-founded or female-led businesses typically do receive a smaller share of venture capital and private equity funding compared to male founders. One example of this is in recent years, all female founding teams received only 2% of equity investment in the UK. That does increase to 18% for mixed teams. And there are various reports showing the benefits of kind of mixed, diverse teams, better performance, better returns for all shareholders. So ultimately at BGF, we'd really like to see companies led by women, led by mixed teams, being successful in raising the capital that they need to scale and succeed. We also see this gap on the non-exec side, where chairs and non-executive directors of companies raising funding are often quite heavily weighted towards men. Again, this is something that we're really keen to work on and improve through our non-exec network. So women have accounted for over 25% of the chair appointments to portfolio company boards over the last 3 years, and we're keen to keep trying to increase that percentage. But ultimately, we can look at all of these statistics in the market, but we think it's important to recognise that female-led teams can face biases or different challenges in raising capital. This can include a lack of access to networks traditionally dominated by men. It could be less familiarity with what the fundraising process entails. We do also hear some anecdotal feedback from some of the teams that we work with, that they can be asked more risk-averse questions that focus on the downside and what could go wrong. So I think all of this means that there are some challenges to address if we're going to level the playing field. So all of that is what's made us want to organise this webinar and try to improve things.
Now we're going to chat through the kind of role of growth capital in business expansion and when to consider raising investment. And given that mine and Lucy's approach on that is slightly different, we're going to chat through from a growth angle, but also from an early stage angle. But in general, kind of what is growth capital? So fund in exchange for equity to support the growth of a business. In terms of BGF, we are taking a minority equity stake, which allows founders to retain control but benefit from our network and expertise, with a BGF investor joining the board. So it should definitely be seen as a growth enabler that will help unlock future growth opportunities. And there's many different sources that typically follow a funding life cycle, from kind of angel high net worth in the earlier stages through to venture capital and early stage funds, and then growth capital funds through to private equity funds, and then through to listing on public markets through an IPO. And so just wanted to kind of highlight that that range of kind of funding options throughout the life cycle.
And if we look at the spectrum, and I'll start with the early stage part of the funding journey, I think it's important to acknowledge, first of all, that raising capital might not be the best choice for every business. So for some sectors and business models, it may work much better to focus on bootstrapping funding through personal networks, trying to reach profitability as quickly as possible, rather than taking on early investment. So there is a trade-off that we wanted to be open about of ownership dilution, having multiple voices around the table, and feeding into pretty critical early strategic decisions. That can be for the better, and we hope in BGF's case it is, but it can also be for the worse, depending on the number of parties around the table. So it is just something that needs careful consideration about the right point in time, the right funding strategy for a particular company. On the positive side, there are plenty of advantages that raising capital can bring. Obviously, the additional funding, which can accelerate growth in lots of different ways. It may enable a company to consider strategies that it otherwise wouldn't be able to. In the life sciences and deep tech sectors that we focus on in my team, early stage funding is generally a necessity because these companies have capital intensive R&D before they can reach commercialization. So a good way to think about it, which we try to encourage, is what will the additional capital allow me to reach in terms of milestones that build value in the business. Then aside from the cash itself, there are plenty of other advantages that can come from taking on investment. This will vary by fund and by approach. So it does add to the importance of doing due diligence on the investor, as well as them doing due diligence on you, and getting a feel for how you might partner together. At BGF, for example, we really focus on trying to introduce useful people to companies in the portfolio, be that chairs and non-execs at board level, or advisors in specific skill sets. We also try to support in building out financial modelling, financial functions, and scenario planning so that companies are well placed to respond to any challenges that may arise. And also just making sure that the right operational processes and governance are in place to really help companies have the right foundations as they scale.
And then, yeah, just to touch on the growth side. So most of the businesses we work with are already profitable. So the question then becomes, do they continue as is and grow at similar levels kind of organically, or do they explore accelerating the growth of the business with a value-adding partner? And that could be additional funding into the business to support the accelerated growth, but also potentially allowing shareholders, founders to realise some of their value now, or a combination of both. But having the capital resources and support to really support that sustainable growth instead. So the accelerated growth opportunities could include kind of acquiring a complementary business or investing more in go-to-market strategy, or through the shareholders cashing in some of their value now to bring on an investment partner. And the advantage of bringing on that investment partner is to give management, shareholders increased confidence in delivery of that strategic plan and growth due to the kind of value creation support that an investment partner can bring, but also allow management shareholders to realign their appetite for risk, which can also unlock growth. So as Lucy's mentioned, there's lots of key considerations when bringing on institutional investors, many of which are comparable across the early stage and growth. And some of it is around that kind of timing piece. So not wanting to go too early, so needing to do enough of, getting enough of a track record to get investors comfortable, or also not wanting to do it too late and kind of falling behind the market in competition. So it's really a balance in terms of when the right time to consider that is. As Lucy's mentioned, there will be equity dilution for that. So really business owners to understand kind of what they want that to look like, and getting comfortable that in the future you should have a smaller piece of a larger pie when the growth plan is delivered. And I suppose the other piece that's worth considering is there will be an increased level of governance and reporting. And this should be seen as a positive and a natural evolution of a growing business as it professionalises, but will require a level of resource if that exceeds the kind of current resource within the business. Like I say, we see that as a positive, but something to flag and be aware of kind of post investment.
And Hannah, we're just getting some questions in around executives and board seats. I don't know if you could just perhaps talk a little bit around that and whether BGF ever put staff in firms as executives, or is it just on the board?
Yes, we do as well. Yeah, so we've got we're very fortunate to have a very strong talent network that's managed internally. So we've got a network of 6,000 individuals made up of non-executives, but also executives and kind of former relationships. So again, that people roadmap is very, very important to us, and management teams are very important to us. So we're often quite heavily involved in kind of helping map that out and then finding the right talent to kind of plug the gap in that as well. And again, making sure that there is diversity around that board in terms of non-executive, but also executive. So something that we do focus on and support businesses with, and that comes as part of the value creation support, is that people roadmap feeding into that in terms of the right time to bring the right people on board, but also getting the right skills and experience.
And I'd just add to that, maybe depending on where the question was coming from, the way we'd approach that is very much working with the existing management team to identify gaps and think about any succession planning. It wouldn't be a case of us imposing certain executives on a company. It's more about working as a partnership, creating as Hannah said, a people roadmap and then filling gaps. At the non-executive level on the board, that's then another way to kind of augment the capabilities already around the table. But I think on both of those fronts, we try to be really conscious of we're backing the team to be the right people to drive this business. And if there are additional skill sets, then we want to work with you to find the right people for that.
Great, thank you.
I think we could now move on to the preparation phase, and if there are questions, then please do chip in and we can try and cover them as we go. But if we assume you're at the point in your journey of having decided you would like to go out and raise capital, I think we're quite conscious that can be a daunting process. It can be quite opaque. So we're keen to just talk through some of the steps that can be taken to best prepare yourself for that process. So maybe just to start with the pitch and how to pitch to investors. I think the the real consistent thing that we see is that the best pitches tell a story. They articulate a clear reason for this idea, for this company to exist. And then they can articulate a trajectory. So how funding will be leveraged to create significant additional value in the business. What does the roadmap look like? Where could this business be in 3-5 years? And how could it have grown? A good way to frame this can be starting with the provenance of the company, why it was founded, what was the unmet need that was being addressed, and then charting through its development to the present day, and sketching out where the business could then be in the future. I think on the flip side, one of the common mistakes that we see can be pitches that dive straight into the detail without setting the scene in that way and telling that story. That's probably particularly true in some of the companies that I spend time meeting. So in the life sciences area, we have lots of kind of very bright, very technical founders who can be very excited to get straight into the detail, straight into the science, straight into the data. But actually, if we don't have a clear sense of that narrative, then it can be quite hard to piece together what that data could mean in terms of the company's outlook and how it might grow. Another mistake that we see can be a lack of clear planning around the right amount of funding that is needed and where it will take the company to. With a early stage lens on that, even if a company is pre-revenue, it's still very important to have a detailed understanding of the cost base, how it might scale, what the funding would go towards and unlock, and what that could mean in terms of the potential value and returns for the business.
And yeah, there'll be lots of comparisons to that or similarities for the growth side. But yeah, it's definitely important that there is that level of preparation. Although a lot of the information that we're requiring is kind of best practice reporting within any business in terms of getting that kind of clear strategic plan and also the supportive kind of performance data, both financial and non-financial metrics. It's really important, as Lucy mentioned, to clearly articulate that strategic plan, the kind of market opportunity, and also kind of linking that into the people roadmap. And then from that, developing a 3 to 5 year financial model to really support the plan with kind of built up growth assumptions that are supported by historical performance trends and clear assumptions on the future growth initiatives to get investors comfortable in the forecast to kind of have confidence in that deliverability. I think another area is thinking through the key objective of the business and the shareholders. You know, what do they want from an investment partner? To Lucy's point, how much they want to raise, but also kind of what style investors they want to work with. I think relationships very, very important. It's very important for us, but I think it should definitely be on the minds of management teams in terms of what investment partner they want to work with, and how they're going to act, but also kind of what value add they're going to bring outside of the capital. And kind of key tips for success around that is starting early. So it often takes longer than expected. But I think having kind of that future, that kind of forward visibility on things really helps to understand, get clarity on the narrative, but also on the kind of quantum and timing of that. I think as well, kind of getting views on kind of where the business might be in terms of valuation, and also getting a kind of market view on kind of terms expectations. So again, speaking to advisors and contacts to understand kind of what the world of investment looks like, to be kind of in the know, I suppose, once they start having those kind of detailed conversations with investors. And that probably links in then to the kind of engage and support. So speaking to advisors or mentors that have been through this before, to really understand that journey and bounce ideas around. And then also the one big challenge as well is also staying focused. So it can be time consuming, and it's hard then to kind of not lose focus of running the business. But that should be the key piece that the businesses, the owners need to do is focus on the kind of day to day, but just conscious that the fundraise process can take time and can take resources out of the business.
We're just getting some questions here just around the types of sectors we invest in. So wondered if you could perhaps define deep tech and kind of software, so more of the early stage businesses that we invest in, and then also just clarify whether we are just UK or also Northern Ireland as well.
Yeah, sure. Should I take the sectors, and then Hannah, maybe if you talk about the regions we cover? So I guess on sectors as a whole, BGF invests right across the range. So we've got a very broad portfolio across all sectors, really. But to take the point on deep tech specifically, there's again quite a lot of variety in there. So to give some examples, we have a few investments in clean technologies, so things that support the transition towards a more clean energy system, so battery technologies, semiconductor companies. I could list out quite a few different verticals within that, but maybe the more useful way to highlight it is that the consistent thing we look for is something really proprietary with a lot of research and IP behind it. And that's kind of what guides our investment thesis, that we think there's something quite special behind the technology that's being worked on. If there are any specific follow-ups, very happy to answer. But I'd say it's a pretty broad definition of deep tech, with the consistent thread being that depth of intellectual property.
And then, to pick up on the regional point, so BGF is very much a regional investor, so working across the UK and across Ireland. So we've got individuals that cover the Northern Ireland piece as well. But we're very much focused on patch, and we see the benefit that we get to then work with local businesses, but build, very strong relationships, but be very close to those businesses. So most of the portfolio companies that I'm involved with are probably less than an hour away from my home office, which is great because it means we get to spend the time with them pre-investment in terms of building a relationship, but also post-investment in terms of that kind of value creation support as well.
Great, thanks. And we've just got one follow-up question just about around how people can go about starting a conversation with you. If there are any other kind of specific asks other than being kind of on the deep tech side, and I guess the best way to contact you about anything like that.
Yeah, sure. I think in terms of approach, very happy to just be emailed for an initial conversation. So I think all of our contact details are available on the website. In terms of what's most useful for that initial conversation, having a non-confidential pitch deck, which you're happy to share in the first place, is quite a useful way for us to gain some sense of your business and where it sits, and make sure that the right person within BGF has that initial look and conversation. I think more broadly, maybe a point around how to approach investors. I think that can be quite difficult if you're not already plugged in and have those relationships. So that's something we're quite conscious of. I think the things I'd recommend there are some very useful kind of registers and directories online of different investors, the stage and the sectors that they cover. So having a look there, understanding the companies in the portfolios of different funds and whether that aligns with your own company. And then I think the other kind of tips would be, there are quite a lot of different kind of network groups, particularly for female entrepreneurs now, but there could actually be sector-based groups which can help with some of these introductions and relationships. So unfortunately, it is a fact that people with those connections and introductions might have a smoother route in. So we're very conscious of that and keen to help where we can. And actually, I try to take an approach where if I'm contacted by a female founder in particular, I'll at least have a conversation or try to give a suggestion of the right place to go.
Yeah, I think that network piece is really important. I think hopefully that's why events like this are helpful, but also in-person events, just connecting with the right people. Because I think a warm intro is helpful. I appreciate that the funding landscape can be quite difficult to navigate. So having somebody to help you kind of highlight kind of which funds may be applicable at this time. And similar to Lucy, I'm always happy to have those conversations because I'd much rather try and support a founder and steer in the right direction. And if it's not one for us now, you know, if there's another fund that can help currently, then great. But again, for us, it's all about relationships. So even if businesses are not looking to raise capital now, but are looking to potentially consider that in the future, you know, we're keen to build relationship over time, and support in any way that we can in terms of demystifying a lot of that.
Was there anything else, Sophie, or should we move on?
We are getting a lot of questions around the metrics that BGF typically look for when looking at investments. So perhaps we can touch on that, but that may maybe come slightly later.
I think we could actually cover that through this next section, couldn't we, Hannah? It probably ties quite nicely. So we'll give it a go, and if we're not covering it enough, then I'm very happy to stop for some more questions. So the next phase we were planning to talk about is being investment ready and what that looks like. And it's maybe helpful to just talk through from our perspective, sitting in the investment team, how we would be looking at an opportunity and assessing it. And that's partly our own kind of personal assessment when we're first working through something and conducting due diligence. It then feeds into our investment committee process. So BGF, like most funds in this space, has a process whereby we'll present an opportunity to our investment committee, present what we think the attractions and potential risks of the opportunity are. And there are certain criteria that we always discuss. So we've tried to structure this next section to just run through those so that anybody on the other side has a good sense of what we'll be looking for and what will be being questioned around. So to start, I'll cover more from an early stage angle, and then Hannah can explain how that differs for a growth stage scaling company. But it's pretty similar headline themes across the two. So looking across business, market, financials, team, and then the deal. So those are probably the key headings that we think about. To start with the business itself, on the early stage side, we'll be looking to see that there is an interesting, innovative technology based on, as I mentioned before, a certain depth of research and that's protected by intellectual property. We're always keen to see that it's a solution meeting a clear problem in the market rather than something clever that's kind of searching for an application. So that's something that we'll often debate quite heavily between ourselves and do some research to make sure we're comfortable on that. In terms of the market itself, we want to see a significant addressable TAM, which is a bit of jargon, but total addressable market. So we'll often do a bit of market sizing work to understand the total opportunity out there. And we may then also layer that on with what we think is the realistic, more immediately served market for this particular business. So that could be applying a filter based on geography or based on a certain vertical within that wider market pool. Then thinking about financials, Hannah will have more metrics to cover here than I will, because as I mentioned, we're looking at companies that are earlier in their journey and might not necessarily have those financial metrics that lots of investors rely on. So what that means in terms of our financial diligence is that we really focus in on understanding the cash runway and the cash burn. So looking month by month at where the funding is being spent and how that links back to the value creation in the business. So are we spending in the right areas? How does that cost base break down? What are the levers that could be flexed if we needed to extend the runway and have a bit more buffer? So we will complete a fair bit of financial due diligence, but mostly around getting comfortable that there's a solid financial model in place, the right systems in place, and that we have that flexibility in the scenarios that I described there. Then in terms of teams, it's quite difficult to define this because actually we back all sorts of exceptional founding teams, and there aren't any particular themes to that really, particularly within early stage. We back some teams that are first-time founders, so they're commercializing their PhD research and spinning it out of a university. Or we might be backing really experienced teams with decades of work in a relevant industry who have then come across this idea and want to start their own business. The consistent threads there are probably the belief in the idea, the dedication to seeing it through and building a really strong team around them. So actually, we'll obviously spend a fair bit of time with kind of the CEO and then the C-suite, but actually we're always really keen to meet some of the wider individuals in the team because that gives a really strong sense of culture and alignment. And as we've touched on already, understanding any gaps in the team and how that needs to evolve is another thing that we spend quite a lot of time thinking about. Then finally on deal, there are probably some pretty consistent points across Hannah and I when we're looking at companies, in that we have to think about valuation, our check size, and then what percentage of ownership that would give us. We have to model that through and plot what a potential exit would be and what the returns from that would mean for BGF and all shareholders, actually, because an important point for us is alignment and that we're all aiming for the same kind of exit and returns. And ultimately for early stage, it usually comes down to a risk return balance. So we're looking at the current level of risk, what that kind of upside opportunity could be if things go well, and does that justify us taking the risk of investing at quite an early stage when there's still things to prove. And then just one other point to highlight here is that we do really like to syndicate with co-investors. So I think there can be a perception of kind of competition between different funds, but definitely the part of the market where I spend my time, we're almost always syndicating with other co-investors. So working quite collaboratively together. So part of our investment thesis is how do we best put together that group of co-investors so that it's well balanced, so that we have the right voices and skill sets around the table. And that's something that we can work with teams on quite collaboratively.
Yeah, as Lucy said, there's lots of that will kind of flow into how we assess things from a growth angle as well. So I'll try and highlight kind of where there is commonality and where it slightly differs. But again, we're looking at it across the same verticals, so business, market, financials, management, and the kind of deal dynamics. On the business side, it's that track record of growth and profitability, and typically profitability, to be able to prove that out, to give confidence in the kind of future growth profile as well. And then that strong value proposition, but also understanding the kind of barriers to entry for the business. And that clear growth strategy is really important. So it's us being comfortable then that the business is very well positioned to execute on that growth plan. In terms of the market, so kind of credible ability to scale in a large or growing addressable market. And again, very similar to Lucy, but kind of understanding the size of that, kind of where the business is positioned, and how it plans to kind of take advantage of the market growth or take share in that market. And then also having that kind of clear understanding of the competitive landscape and how the business really competes and kind of wins in that market is really, really important. And then onto the financials, again, it is a slightly different approach from the growth angle, given the businesses that we are working with are in revenue. But really important to have that good quality financial information in terms of, the profit and loss and kind of standard financial metrics, but also the KPIs that come with that, just understanding how the KPIs have performed over time and how they're expected to perform into the future. So that solid financial metrics and KPIs are really important. There was a question around particularly kind of B2B SaaS metrics. And there's the kind of rule of 40, which is kind of assessed, something we would look at internally, which is basically the revenue growth rate plus the profit margin to be 40% or above, which is seen as good in the industry. So that's something we definitely assess, but there's also kind of wider metrics. And again, we can follow up with a diagram that kind of highlights a lot of those kind of key metrics in software as a service space, and how that's seen in terms of what's good, what's kind of best in class. So we can definitely share that later. I think that's very, very important, particularly in the tech space. Another thing that's really important to us is the quality of earnings. And I think the reason that we're assessing those kind of metrics in technology is because that they should be high growth rates. So we're typically looking at growth rates of 50 to 100% year on year. But actually it's the kind of forward visibility. So the reason that, you know, the SaaS businesses attract higher multiples is because it's typically got a better visibility profile into the future. But the quality of earnings piece is very important. So how much outside of technology have businesses got visibility of that future underlying revenue and core business? And then again, it's having that good data to really tell that story and give confidence in the forecasts. Then moving on to management, similar to Lucy, very, very important to us. You know, we want to build relationships, strong relationships with management teams, and we're effectively backing those management teams to deliver the plan. So we're looking for individuals that are motivated and ambitious, with that track record and experience. But as we touched on earlier, you know, we recognise there potentially is gaps in that skill set across management. You know, as the business is starting to mature, we appreciate that there needs to be a kind of people roadmap. But actually, again, that's something that BGF feeds into to support the business to fill in those skill gaps as the business continues to grow. But strong relationships are definitely really, really important to us. And making sure that we've got very good alignment with kind of the values of the business and its objectives. And then just moving on to the kind of deal dynamics. So it's slightly different to early stage, where we're often the sole investor. So we can do co-investments, and we definitely have done co-investments, but we don't need to do that. And again, it comes back to that kind of clear alignment with the shareholders and management. So BGF wants to be a meaningful minority investor, but not a controlling investor. So we definitely want to be there as support. We want to be on the board. We want to be adding value, but we don't want to be needing to take control and involved in the kind of day-to-day running, but more at that kind of strategic level, board level support. And another key point for us is really understanding that exit potential and the options around that. I think sometimes businesses don't necessarily build a business with kind of end in mind, but it's really understanding kind of what that exit may look like in the future. And I think it's just a consideration that all businesses should think around kind of who they're creating value for, what the metrics need to look like to support that, to make sure they've got that optionality in the future, even if they haven't got a kind of clear view on when that timing may be.
I think that's everything we were hoping to cover, and we really hope that's been helpful. But maybe if we take any final questions with any time we have left.
Yeah, we're just getting some questions around average ticket size. Just wondered if you could give an indication on the growth and the early stage around what our typical investments look like.
If I go first quickly, we do have quite a range that we can consider. So I think I mentioned earlier between 3 and 10 million as a first check. In terms of an average, I'd say 4 to 5 million is quite typical for us. We can consider smaller even than that 3 I mentioned. For the cases where we're considering the larger end of that range, so kind of 8, 9, 10. There probably needs to be something slightly exceptional there in terms of the maturity of the company and the stage that it's at. So, for example, I spend a lot of time looking at drug discovery companies. So that could be that they're a later stage of clinical development. So they've completed quite a lot of the early work and de-risked in that way. So we feel comfortable writing a slightly larger check.
Yeah, and just to touch on growth again, so we're investing 3 to 30 million. So again, pretty broad in terms of initial check size. And our average check size is probably nearer 8 million. So we definitely want to be supporting business across that spectrum. And I think at the kind of lower end, it's particularly interesting where there's potentially that follow-on opportunity. So about A third of our capital is going back into the portfolio every year. And although not all portfolio companies take follow on, I think that where there's a kind of clear opportunity to deploy more capital, and that might be further liquidity to shareholders over time, or that may be supporting acquisitions over time. It's kind of understanding what that kind of broader opportunity is kind of from the onset.
Thank you. And we're also getting some questions around whether we have the capabilities to do the technical DD ahead of investment, and also what types of IP protection we're considering.
Yeah, on the technical due diligence, we would look to work with the most relevant people, really. I think it's a question of knowing what we can do ourselves and then knowing where we need to go to the experts. And we do really try to lean on experts to be useful both to us, but actually to the company as well. So depending on the sector and the area, we'll try to source somebody who's got really relevant experience who can help us review things, review plans, maybe actually give some useful recommendations to the team. So it's a bit of a mix of we'll definitely get into the detail ourselves, but we'll usually work with somebody external to help with that. And then the second question, I think that was around intellectual property. So yeah, good question, because I think I've mentioned that quite a lot, but I haven't really explained what I mean by that. So we're fundamentally trying to get comfortable that there is something innovative behind the technology in the company, and then that it has the right protections around it. So the most obvious form of that is patents. But actually there can also be a lot in terms of know-how within the business that isn't kind of formally documented and included in patents. Across both of those fronts, what we really want to see is that a sensible approach has been taken, because it can provide a really useful kind of barrier to competition and defensibility within the market. So some of the things we'll do there is we'll start just by having a conversation with the team about the strategy, understanding the current IP situation. So are there patents in place? Are there plans to patent things in future? We might try and talk to the company's IP advisors. So just get a sense of the work that's already being done. We can be more kind of value add, and if it's a company that's quite early in the journey of thinking about that, we might actually introduce IP advisors who could help work on the strategy for the next stage. So again, I'm giving quite a broad answer because it can really vary case by case depending on where the company is and how significant that IP question is.
Thank you. And then also just a few questions around the value that BGF can provide beyond just investment, particularly on the governance side, and around what a good board pack might look like and the support we can provide on that. What kind of key information would we look to see on that side?
Yes, I suppose in terms of the value add piece, it's very, very important to us. And there's many verticals in terms of where we can support around that. I think just leveraging the expertise within BGF. So as you mentioned earlier, we've invested in over 600 businesses. There's lots of insight, knowledge, sector expertise within BGF that we can really leverage. And the support of a scaling business. You know, many of us are sitting on multiple boards, scaling businesses through to exit. So there's the experience of the kind of investors director that joins the board, but also the wider support of our kind of value creation team, which could be supporting a sustainability roadmap and using our kind of in-house expertise to help map that out. Similarly with kind of technical roadmap, but any function that's needing further support, there are either kind of pre-vetted individuals that we work with closely that can help support that. So it might be, for example, investment in kind of sales and marketing and helping shape that kind of sales and marketing strategy. So how can we at board level support around that and bring that to the strategy of the business to really excel? The question on kind of board pack is very important, and often a lot of the businesses that we're working with kind of haven't had board meetings pre our investment. So we're definitely keen to help shape that and shape the kind of governance around the business. And I think a good way of thinking about it is, you know, we'll typically want a kind of CEO report, so getting views in terms of the key value drivers, kind of sales and operations, kind of understanding the kind of key customer base, kind of where the business is focused. Obviously, people are very important, and also kind of priorities from the CEO's perspective. Then obviously the finance is very important. Again, touching on those kind of KPIs that we're tracking versus budget to understand kind of how the business is performing versus expectation. And I think the key thing then for board level is that value creation piece. So what are our strategic initiatives, kind of how are we progressing with those, kind of what else can the board be inputted to support on that? Understanding the market, so keeping a track of kind of competitor updates, kind of corporate activity, understanding what's going on in the market and how the business potentially needs to adapt and be agile to that. And then the governance piece is obviously important as well. So understanding kind of key risks in the business, how can we address those, how can we navigate that, to make sure that we're kind of covering off the governance piece as well.
Great, thank you. And then we've just got one question around pitch decks and the importance of pitch decks. Someone here is just finding it that they're kind of getting conflicting information, depending on who they speak to in terms of what should be included in a pitch deck. So just kind of would be good to get your views on that. Obviously, we touched on it a little bit earlier. Yeah.
Yeah, I think it's a good point, because you could probably talk to 5-10 different people and they'd all have a slightly different formula of what they think the ideal pitch deck should be. I think we do see a fair amount of variation in how people approach them, but the strong ones that jump out, there probably are some common attributes. I think a key thing really is that it's concise and easy for somebody to skim through and pull out the core messages. I think the worst pitch decks are ones which are just really long and really difficult to get to the key points. So I'd just make that point. I guess to put it in context, I'm probably skimming through sometimes 20, 30, 40 pitch decks a week. So it is quite important to be able to quickly get a feel for what the person is trying to get across. I'm not going to be able to carve out kind of several hours for a first read. I might then come back and spend that time. But it's important to quickly get your points across. So I think the key things, it probably ties back to those headings we were kind of describing in terms of what we look for in our investment thesis. So kind of the business, the market, the team, the financials, and the investment opportunity. I think those headings always have to be there. A way I quite like seeing the story laid out is starting with what is the problem we're addressing and why is our solution special? And that then framing the rest of the deck could then move on to, and why are we the right team to do this? And where do we think we'll get to in the next few years? So then kind of tagging on those other pieces of the puzzle. But I think a strong opening statement of this is the problem, this is why we exist. And then obviously at some point a clear articulation of the need for additional capital and what that would go towards.
Right, and then just leading on from that, I suppose, we've got a question around whether there's any other kind of content, like a questionnaire to assess investor readiness, or anything that you could, I suppose, point people to when they are kind of looking or preparing for investment.
I don't think we've got anything internally, but I would hope that there'd be lots of resources kind of outside of BGF that could support that. So there's lots of accelerators or funding support hubs that should have things to really help navigate. But I appreciate that there's a lot of noise to kind of cut through. So again, we can do some digging to see if there's a best practice option for that to send, because I think there's probably lots of content out there. But happy to kind of sense check something and kind of circulate that if helpful, because appreciate that particularly with this kind of different messages coming from different angles.
And then I think this relates to a previous question just around B2B SaaS. Just someone's just asking for some clarity on the thresholds of ARR. So is BGF, for instance, open to ARR less than 500k, or due to the ticket size, will it need to be at least 1 million?
So from the kind of growth angle, so we're typically looking at businesses that in the SaaS space that are doing kind of 2 to 3 million of ARR. And to support that as well, it's the kind of growth rate. So they're typically growing kind of 50 to 100% per annum. So at that point is when we could start to look in terms of deploying investment. So kind of sub 2 million is probably still too early for us. Hopefully that's helpful in terms of a better steer on kind of where we start to explore that.
Thanks. And then this is probably a nice one to end on, actually. Just got a question in around what sectors you're both finding most interesting or the most excited about at the moment.
Well, I'm a bit unusual at BGF in that I am sector specialised, so it's an easy question for me. So I just spend all of my time within life sciences, and I'd say lots of things to be excited about there, in that there's so much interesting innovation and research in the UK specifically. We're actually really, really strong in life sciences. So there are lots of kind of breakthroughs coming through that could really transform how we diagnose disease, how we treat disease. I think some particular areas are kind of early detection that allows patients to be put on the right treatment, and more personalized treatments that are relevant to them. And then on the kind of therapeutic side, there's just so much interesting innovation coming through in terms of new drug formats, which can be more targeted, more effective, have fewer side effects. So yeah, lots to be excited about in life sciences.
Yeah, I suppose from the growth angle, again, it's great that we are sector agnostic, so I get to look at consumer businesses, manufacturing businesses, tech businesses, which keeps it very, very interesting. I think in terms of currently, there's lots of things coming through that, you know, are leading with innovation. So we see a lot of manufacturing businesses, particularly in our region, but actually those that are forward thinking around innovation. So how can we automate? How can we innovate? How can we better our processes? To stay kind of ahead of the game. There's a few also kind of business support service businesses that are leading with, say, consultancy, but developing technology in the background to really leverage, which is quite interesting, where they're getting, you know, a lot of the insight kind of there at the forefront through the consultancy arm, but also developing technology in the background that can help service that better, which is also quite interesting.
Great, thank you. So I think that's probably all we've got time for today. Just thank you again to everyone for joining. And as Hannah and Lucy both mentioned, we will be sending around some slides following this session. And the session will also be available on our YouTube, a recording of the session. So yeah, thank you everyone.
Thank you very much.
Yeah, thanks for joining.